Hello, are we live? Oh, we're live. Okay. Hi, everyone. Welcome to the Enterprise AI panel. And today we have a few of my favorite podcast guests and speakers here. Why don't we start with a quick intro of everyone? Hey, Kelly, you want to start?
Yeah, hi, I'm Nick Hill. I'm a managing director at Insight Venture Partners. I'm based out here in San Francisco and help lead our West Coast office. We're a New York-based firm with 90 billion of regulatory AUM. We are software-focused investors in the venture and growth spaces, and we're founded in 1995.
Hey everyone, my name is Simon Wu. I'm a partner at Cathay Innovation, not affiliated with the airline Cathay Pacific, but just in case you were wondering. We are an early stage fund focused on Series A's and B's, manage about $2.5 billion, investing about $1 billion fund right now across generalist technology in Europe, US, and Asia. I lead our US office out here in San Francisco.
Hey everyone, I'm Arnav. I'm a partner at Peak 15. Peak 15 is formerly known as Sequoia India. I joined a couple of weeks ago to help build out our US investment practice and was at YC for about 4 years before that.
Hi everyone, my name is Jake Flomenberg. I'm a general partner at Wing. We're an early stage fund that leads inception through Series A rounds, and we've been doing that only in companies built on data powered by AI since the beginning.
Hi everyone, Eugene Lee. I'm a partner at Omers Ventures. We're part of Omers, which is a $130 billion pension plan based out of Toronto. We've got an office here in the Bay Area, Toronto obviously, and then New York as well. We're Series A, B, C shop and focus on 4 categories: infrastructure software, vertical software, fintech, and then obviously enterprise. That's why I'm up here today.
I feel like Enterprise AI is definitely one of my favorite panels. I don't want to pick panels. I made them all by myself, but I feel like this is one of the most important panels because we spend half of our life working, and improving productivity at work is extremely important. And today I want to start off with the first topic in the more general landscape. As we all know, in the past few days and few weeks, we're experiencing a lot of uncertainty in the world, especially on the stock market too. So maybe we could kick off with what is the current investing enterprise startup landscape look like, and what are some changes that you think we'll be seeing in the next few months? Want to start with Jake?
Sure. So look, there's been a lot of uncertainty in the market in the last couple of weeks. I think we can see, that some of our policies as a country are impacting that. And what happens, when there's uncertainty in the market? I think we're seeing a lot of large budgets at these large corporations, where what do you do when there's uncertainty? You pause the budgets, you freeze the budgets, you don't make large capital expenditures. There have been certain portions of the market, like universities, that have had funding taken away. What's going to happen as a result? Incremental budget dollars are going to become hard to come by. But conversely, I think there's a great opportunity for AI-powered solutions that can help maybe automate work or save time and money to get greater adoption. And some companies might find themselves in a position where the sort of need to do that is so great, they'll take a little bit more risk and move a little quicker than they might in other times. So it might be a great impetus in some ways.
Yeah, I'll add a little bit to that. I think before all the changes that happened kind of this year, I think last year and up until those changes, AI and AI spending has kind of gone wildfire. And I think, not that it's pulling back by any means, but I think there was a little bit of reverting back to a couple years ago, where you're starting to fight for budgets again, where it's back to needs to have. AI has been this is new, this is different. Let's try it and see where it goes. I don't know if it'll go all the way back to a couple years ago where budgets were truly frozen, but I think with the uncertainty, it's starting to create that a little bit. But I do think AI has a little bit of a difference, where what Jake was talking about is that there is an ability to save on headcount with AI tooling. So there's some cost savings that could potentially be built in, where you could argue where you could fight for some of that budget going forward.
Maybe 2 things I'd add is breaking news. I'm sure some of you guys saw on Twitter already, but 90-day pause for non-retaliating countries. So everyone's stock portfolio is up 11% right now. So we'll start with that. With that uncertainty, it's like a casino right now. But I think the second thing is interesting. Like 2 things I was trying to pull in the last 7 days. Like one, everyone probably had some IPOs potentially in their portfolios right now. How is that being impacted? What are the bankers saying? What are some of the long-only funds that you're hoping to buy in those names? And how does that affect downstream, right? I think one of the things we saw in 2022 was our friends that were at hybrid funds immediately just stopped doing growth rounds. So were term sheets getting pulled the last couple of days, where your next big, $100 million round that gets announced just changed overnight because they didn't want to fund it because your favorite enterprise software company, Meta's down, 30% plus, right? Is that better to buy Meta right now than to buy your illiquid private company making 100 million run rate, growing at 35%, right? Like, it's such an obvious choice on where you can do capital allocation. I think that's a really interesting when you think back to at our stages where we're doing a lot of early stage, what can we really control? And it really comes back to, I think the last panel brought up is just that customer pain points and being able to offer that, you're still gonna grow super fast because at the end of the day, you're solving something that AI now is much more able to do than before.
Yeah, I think the panelists to my left have said it well. I think my observations right now are my vibe check, as you mentioned. I think the secular trend line for AI is here and here to stay. I think the incremental budget we've seen from the enterprise buyer has generally gone to AI. That has moved from, I think, trialing and piloting to really wanting to know how will a solution deliver outcomes. I think in this what I'll call a more policy-driven, volatile macro environment, that focus on outcomes is so much more important to capture that incremental budget dollar. I think we'll talk a lot about that, and would completely agree that as we have more volatility in the markets, we've started to see even anecdotally over the last week, enterprises start to pause on making decisions. And I think a lot of our venture markets, especially at the growth stages, are driven by liquidity. And there has been a pause in liquidity, or a lot of the liquidity that people were anticipating in the first half of this year.
Yeah, I would echo some of that. I think, in my mind, I think the models have gotten so much better this year that maybe at the early stage it almost doesn't matter as much. I think it does matter at the growth stage in terms of hiring, valuations. But it's interesting, in like tougher times, when you have PMF, it means the customer really wants your product. And I think you can separate the signal from the noise. But I do think overall, like living in this negative environment is always bad for startups. It's always bad for customers. Even small things like when you're an early stage startup and you need to get a pilot customer on your company website just to help you out. That becomes harder in this environment. So overall, it's like pretty net negative. But I do think that in an environment like this, if you have PMF, you're probably going to accelerate once things become much better.
For sure. Since we talk about the enterprise budget, I'm sure there's a lot of amazing builders out here are waiting to hear that where VCs and enterprise are spending money on. Maybe we could start with what do you guys are seeing enterprise are buying in terms of using AI products and maybe also from the acquisition standpoint?
I think there are a lot of areas to cover. I think people are definitely buying the data infrastructure to prepare for AI. That has been a core buying need across the enterprise. And then I think there's increasing focus on the application layer, customer service, sales and marketing, the rise of coding copilot tools. And then in the verticals, I see a lot of vertical buyers, whether that's financial services or healthcare, adopting tools at the application layer.
I sort of directionally agree. We surveyed a couple dozen CIOs and CTOs recently, and I think the stack order of adoption was sort of coding tools and copilots, enterprise search, customer support, and then it sort of fell off from there. So I think those are the things that people are starting to buy. When we talk to people about what they want to build, it's early days, and I don't think most companies truthfully have all the talent that they need. But a lot of what they complain about and ask for is all of the supporting infrastructure. So no one knows how to deal with sort of the observability, the evaluation, the feedback loops, the RLHF. Like all these things are huge blockers. It's already such a pain to figure out how to deal with the models, how to deal with the application area. A lot of the supporting infrastructure is missing right now or early. And so we hear a lot of people asking for help with that. They want solutions.
Yeah, I think I'm on a board of a company called Scanda AI that was probably in process automation. There's a huge company called Celonis that's also in that category. And part of it is, I know you have a panel on agents later, but a lot of this is very much end-to-end processes. And so a lot of things that are coming out right now is like all this buzz about, hey, I can do X, Y, and Z, but actually enterprises have really complex processes. It's not just, I can do a little point piece solution. And so having that data, understanding it, being able to train it is it's super important. And so what ends up happening right now, funny enough, I am now a vertical guy. Like yesterday I was in biotech, this morning I was in construction, this afternoon I'm in logistics. And every one of but the product is similar, right? It's specific training data, very built into the workflow, deep buying needs, and they wanted a solution before that Accenture, or in this case, forward deploy engineers from Palantir would do, but they're like, maybe I can find a different way of solving it. And I think that is like a big shift in where what we all kind of have metrics-driven kind of SaaS investing look play out, but now you can sell to these verticals historically that wouldn't crack before.
Yeah, maybe just the two other kind of application layer categories that we've seen some I guess progress in is that wasn't mentioned is the CFO stack. We're starting to see a bunch there, kind of attacking accounting and the services component of some of that stuff. There's a lot of manual tasks in that area. We're starting to see a bunch in HR tech too. Questions for me, just put it out there for both those categories, is just going back to the first question around the vibe check and the market volatility is where does that sit in terms of priority of tools that you're going to go buy if things go south?
Yeah, I think enterprises are buying everything. It's just a question of which is the best product. And I think the killer use case, if you think about in the last 2 years, has been search and information retrieval and code gen. And code gen models are so good that if you're not using it, you're probably left behind. So I think enterprises are interested in buying everything. It's just a question of where the models are and what state. I think a lot about in terms of like capability step-up changes, right? Like if you think about voice, that was a big capability step-up change about a year ago. We're still not quite there in terms of like latency. So I think enterprises are very interested in buying everything. And it's just a question of when the models kind of catch up to make it as reliable, because enterprises care a lot about 100% reliability, they care about services, they care about the outcomes. And so the interest that I see, at least from customers I speak to, is like all over the map.
Yeah, they want to buy. They really do. I think it's just getting what works. And I think that there's a lot of overselling, and you can't fake it till you make it, because the instantaneous ability of AI to show that it does work, you can prove it pretty quickly. And I think that's been the hard part where a lot of the startups you've seen or heard just fall short of.
Totally. I think this part, our social media intern could clip into clips. I feel like all the founders want to hear that enterprise want to buy. So maybe we could talk about the defensibility part of it, because I've seen maybe 20 AI SDR app last week, but what are some things that you feel like are important for the defensibility for an AI startup?
Yeah, maybe I can go first. I think my personal view on, being at YC, we used to work with very early stage companies. Like getting to PMF is, what we would call a monthly miracle almost, because it's so hard to get to PMF. I think it's the same core things that always existed, which is focus and speed. I don't think anything changes about this cycle. In theory, every large incumbent should be able to crush any startup. Like OpenAI was a startup, Anthropic was a startup, and you'd argue, what on earth was Google doing? But I think that I've seen this cycle enough where it's less about can the big companies do it? Of course they can do it, but there's so much people inertia in those organizations that nothing ever gets done. So I think in many ways, no startup has a right to live in the early days except focus and speed and great founders. And then once you get to PMF, I think you're in this like wonderful place where you have PMF, you have customers. And in my mind, I think the long-term moats, at least in Silicon Valley, rarely come from technology moats. It's mostly business moats, like customers, brand, trust in your platform, support, and all those things. And so I think, in my mind, focus and speed is the only thing that matters. And you see that even in companies that are growing really fast. I think we're living in a rare moment in time where the future is almost inevitable. Like we know it's going to happen. And the startups that have insane product velocity are the ones that are winning, because no one's really an expert. No one can predict. There's like very less. I think it's all false precision and kind of predict where the world is going. And so I think startups that just ship really, really fast, in my mind, are the ones that are going to win.
I like what Arnav said a lot, and agree with a ton of it. I mean, we're in the business of and huge believers of backing unique founders and management teams who want to build disruptive and durable companies in their categories. And I think now is such an exciting time to do that. I think of 3 flywheels that founders should adopt as they're building. And I will give credit to Matt McElwain at Madrona, who, we had a long discussion about this, and he framed this in a very nice way. Matt is one of the kind of best enterprise VCs. He's based up in Seattle. The 3 flywheels are a product flywheel, an ecosystem flywheel, and an operation flywheel. The product flywheel is about having a wedge. Do you have something customers absolutely want, even in a volatile macro environment, they want to take it out of your hands? The second is how do you strengthen that moat with your product wedge? And you can do that through data, through personalization now. By building, you can do it by giving people a full end-to-end solution that really solves a business need and aligns to a business need that they're trying to solve. I think the ecosystem flywheel is being aware of the other tool sets and providers in your ecosystem, whether you're serving, a horizontal use case or you're serving a vertical use case. You want ecosystem to adopt what you're doing as well, and you want to better the whole ecosystem. And then the third is operational. I mean, whether you're a pre-LLM software company or a post-LLM software company, I think everyone should be adopting AI in their own organizations to deliver maximum output with the resources that they have.
Maybe to try to slightly build upon this or disagree a little bit. I directionally agree with everything you said. And if I sort of step back for a minute, once upon a time we had on-prem software, and then we had SaaS software that sort of took everything online, and the basis of competition was like, let's make it easier to buy. Then we had what I would call sort of data-driven software, where we sort of brought in all this data analysis and we gave people insights to steer them to better decisions. And like all of that stuff, it still matters. Like you still have to have a deep understanding of the customer and the workflows that they need. The value of sort of data, I think, is becoming more and more central. And if it's possible to get a data moat, a data feedback moat, how enduring it can be is something that we think a lot about over time as we move into AI-powered workflows, which go from insight oftentimes to automation. But I'd say that there's a whole new sort of portion of the stack that people are thinking about building differentiation in, especially as some of these foundation models get a little bit commoditized and start specializing and maybe moving up the stack, dare I say, a little bit. And a lot of it has to do with like, how do agentic workflows work? How do you sort of test this huge possibility of actions? The foundation models are very good at describing things, but taking an action is hard. What are all the evaluations, the different simulations you need to run to figure out how to take that action? And that is where we're seeing like a lot of the application companies invest their time to move fast, and is sort of becoming part of their secret sauce to generate differentiation and value in the market.
I think one thing to add is I think a lot of, Palantir pushed a lot about forward deploy engineers. We're seeing that across the board right now as a way to, one can argue, hey, is this really just Accenture 2.0? But it is when the customer views it as a very important part of the value of the product, and they'll pay for it, and the margins still work. It still comes back to, at the end of the day, does the unit economics work, right? And so if it's 80% software, 70% software, 30% human in the loop in some shape or form, the customer doesn't care, right? And I think that's when we talk about all this software and trying to build so much or abstract so much of it, there's so much commoditization because the speed of shipping is so fast right now that ultimately to have staying power, the customer's not gonna rip you out again after just going live with you, with someone there on site to make it super customized for them. So I think that in itself has been able to, I think, prevent a lot of churn, or frankly, just, we'll see it again in about 2 years.
I agree with everything that's been said for the most part, so I'll try to add something a little different, touch on Jake's point around data, and something that we think about a lot in terms of that data mode is this company or these founders creating some sort of unique insight, unique data, proprietary data within their product that creates this flywheel and keeps on going and going, and you're onto something from that perspective. The other thing that I've thought about just in terms of what potentially wins in the long term is probably maybe different than some of the things that you guys have said, but along the lines of focus and speed is some part of it's just get brand and distribution. Like it's like, can you be the first one to get out there fastest? There's 20 SDR, AI SDR companies, but there's only a few that people actually talk about, right? And so like, how do you get to that point and get that distribution, get that brand faster? So it kind of touches on a little bit of some of the component pieces that people have talked about a little bit, but something that we've thought about as well.
I think there's a false fallacy that like investors are predetermining perceived winners right now. Like, I'm sure a friend of yours, Eric Newcomer, came out with a list with your friends at Wing to create that list, right? You could argue probably 80% of that is a perceived winner for their respective category. But I think if you look at in 2020, we had an equally long list like that for a whole set of different categories. And I would say most of them aren't making it to public markets in 4 years. So I agree with you on the brand, but the enterprises aren't going to buy on that. So I think there's still a missing gap in the. It may work for the SMB or the PLG motion. It may not work as an enduring solution. How do you be the next ServiceNow?
Just to bring a little bit of data to that conversation based on this list, we sort of had this sort of coaches poll of venture, what are the sort of most exciting early, mid, late, and giga stage companies. And we did some sort of meta-analysis over the years in terms of like what's the fall off. And the sort of rough conclusion is that once you make it to the mid stage, you pretty much stay on these lists and continue moving. There's a lot. There is a decent amount of movement in terms of like who's on the early and who graduates to mid. So once you sort of like have the product market fit and scale, it's stickier.
Can I ask a question to my panelists?
Yes.
So when we were talking earlier about what enterprises are buying, I realized, at least I didn't say that they're buying more and more of the foundation models, because that's the substrate for everything, as well as, of course, chips at some level. Do you all view the foundation models as potentially eating more into the infrastructure and application categories that we're looking at today, or less? Let's say relative to a year ago.
I mean, go ahead. Well, look, I think, I don't know whether we're going to be sort of like in an Apple Android ecosystem, but like I think we're seeing rapid commoditization of a good chunk of the foundation model ecosystem. Will there be, and as a result, I think, my observation is that companies are starting to specialize and focus, whether you call that like a use case or moving up the stack. I don't know what the exact right terminology is, but I do think that they're moving up the stack. And a question is like, are they equipped to compete better than everyone else? Like, should we be really concerned? If you're a coding startup, should you be really concerned right now with what Anthropic and OpenAI are going to do? And are they going to eat your lunch? The answer is, I don't know, but I think they're going to go after that sort of coding workload a lot more. And so we think really hard in terms of now, like, not only what is your enduring differentiability against the incumbents, against other startups, do you think you have a distinguishing advantage other than being a thin UI layer on top of someone else's model? And we certainly think about that a lot more these days. Yeah, I mean, definitely see them moving a lot more in the middleware layer. And that's a tough spot to be. I mean, if you think about even a year ago, I remember playing around and hacking on some stuff, and hallucination was the talk, and you literally had to have this giant Google Doc of prompts telling OpenAI what to do, what not to do, or use a tool to manage hallucinations. And now we don't talk about it, and you have a lot of those hallucination observability companies. They're still relevant, but it just becomes harder to compete. I think it's in the model's interest, their interest to make the middleware layer part of their stack and make it as easy to use. I think OpenAI launched an eval UI. They had evals, but they also launched UI around it, which I think competes with a lot of startups. I think on the application layer, I mean, I wouldn't be surprised if OpenAI's secret plan is to try and be the super consumer app. I mean, they haven't talked about it, but I wouldn't be surprised if that's kind of their secret plan. I think on the enterprise, it's interesting. Could they do it? Totally, they could do it, but I don't think they have any more unique advantage than a startup on top, because the startups still have access to the models. In enterprise, a lot what matters is UI, go-to-market, distribution, understanding the customer. And that just requires a lot of focus. But I do think in consumer, they have a huge unfair advantage, because in consumer, there is muscle memory. It's hard to bootstrap distribution in consumer. And so if you're trying to compete with them on the consumer space, you could totally go do it. But I think it's just much easier to compete with them in enterprise, where focus matters a lot more. And they're just not as focused there. And even if they end up being focused, it's unclear to me whether they are more well-positioned than a startup who has the same access to them.
Two examples of that, I think, and actually I think that's exactly right. It's the verticals that matter, right? I think there are, take your favorite, like healthcare, for example. Hippocratic raises hundreds of millions, try to build their own model, then switches away from building it to doing an application, then it's trying to do an agent, et cetera. Like, I think there will always, in each of these large GDP markets, there is a set of vertical information that makes that much more sticky, that a horizontal model doesn't make a difference in the sense that you can swap through on them. But the middleware, absolutely, I think, to Arnav's point, I think you see in healthcare, like OpenAI is trying to partner with providers and payers and try to have a perspective and create something that's working for them, but it's a purposeful solution. And so the local in the sense of a vertical player actually can just obfuscate and build on top of it, and that's where the last mile value is. Same thing for retail, right? You saw Perplexity's push into commerce, right? I think that is really powerful in a sense that who's gonna actually go build that long tail set of connections that OpenAI isn't doing tomorrow? That's where I think ultimately you want to try and control that value, because to your point, it is a consumer app, but is it a commerce app, or is it just my favorite starting point app? We'll go from there.
Actually, I want to piggyback on this. This is off topic, but since we're talking about OpenAI, I feel like it's really interesting to see the enterprise, supposed to be enterprise company, adopting these like consumer model. So like, I guess like in terms of go-to-market, what are you guys seeing that's successful for enterprise AI to implement into their go-to-market strategy?
I think one thing that isn't working is, like last year, I'm sure some of our panelists were all competing. Like there was a whole like race of like funding these AI scribe companies, right? And Microsoft had bought this, had spent $20 billion to buy Nuance and has distributed it. Over time, you go to hospital systems and you talk to them, just using healthcare again as an example, like everyone's like, well, it's on the roadmap. I didn't die yesterday not using this. I'll just wait another 6 months. It'll be good enough, right? Just like your point about hallucinations. Everyone's worried like, oh, like Microsoft won't catch up because of X, Y, and Z reasons. 1 year later, the speed is, it's no longer like cloud where you're like waiting a full couple years for things to catch up. The velocity of this changes so that time to wait or the urgency may not be there. And so when you think about distribution, we look at this as like consumer startup investing, T30, T60, T90, that type of stuff, very much so. Doesn't answer your question, but I think it's a different problem that's trying to be figured out.
I mean, one other observation, it's certainly a little bit lower down the stack. Historically, when people invested in things like data warehouses, let's say, they were sort of very sticky, sort of very hard to move things around between these. And a lot of it is because you're putting in your deep enterprise information at scale. If you try to draw an analogy maybe to some of these foundation models, it's not the same thing. We're still trying to figure out how to bring that enterprise context in. And all the data that it's looking at is from the outside. So switching cost is actually, in some sense, quite low. Maybe some of the frameworks you built around it or create a little bit of lock-in, but it's really easy to flip-flop between all these different things. And so people are willing to try the next great thing a little bit more. And so there's just a lot of movement. And so you really have to just stay ahead every day of the week. And every week there's some new announcement on some leaderboard on some dimension. And it makes this just much more dynamic market adoption than we've seen in other types of technology in the past.
So the lazy question isn't like, hey, is Google or Amazon gonna do it? It's just like, is OpenAI gonna eat your lunch? It's a different way of asking it. But it's more real today than it was back then, because I think because of the velocity you can build on top on there. And so,
It's been said, yeah.
Love that. Okay, so I want to switch gear a little bit. Let's talk about our favorite topic today, which is monetization. So I guess Simon mentioned a little bit on like the unit economics. So I guess what is the core difference between like an AI startup versus a traditional SaaS company in terms of monetization strategies?
I mean, I think what we've seen, at least in terms of pricing, come out, we've typically seen like some hybrid blend of usage model or usage-based pricing and outcome-based pricing. I think it's probably going to go more towards outcome-based pricing, just because you're showing the value of your product. You're going to continue to, if you price that way, the better your product is, the more that you'll hopefully eat. So we've seen that general transition over the last year and a half or so.
Yeah, I think would second that we're seeing either more usage-based, outcome-based models or hybrid models. And I think part of that is aligning ROI with your customer, and it's a great way to develop customer trust. I think the other is being conscious of the cost side. AI, depending on what you're doing, can be more compute inference intensive, and your variable costs can be high. And so in building a healthy business, you can price based on an API call or based on a usage metric. It may allow you to build structurally better gross and end state margins.
I think we've been wrestling with this a lot because I think, one of the things I'll just be honest, I was very short legal tech for a very long time, being in venture for a decade. It's been really hard to sell to lawyers. But I think one of the things you've seen with Harvey, for example, is just ultimately, now there's a whole other conversation about is it good or not, but I'll leave that to all the people that invest in their competitors. But one interesting thing about selling tech-enabled services right now, because that's where a lot of the unit economic question, because there's so much model usage, et cetera, it's like these are very low gross margin business, and you're believing that AI is going to take it up a notch, right? But ultimately, you're making Wilson Sonsini, Latham, take your favorite law firm down here, that much better. You're paying for them. I don't care how much I'm paying Harvey. I'm really caring for buying the brand. And so as long as the brand I support or buying from is there, then that price gets in. That's a very interesting elasticity problem that Harvey has, because they can just charge whatever they want to their end customers relative to, I don't know, an accounting or tax, and is the down the street bookkeeper that uses AI now that is that much more efficient, or the person that was vibe coding a website, can they charge the same? And it creates this interesting, you can't use the same framework of unit economics because you have to really understand how the end market believes and perceives that. It's, Rob, a great question is is the model being commoditized or not? It's what do you believe Anthropic's next chapter is going to look like for you to support a $60 billion valuation? And that, I think, is where the unit economics question is, because we're so early in the journey. I think there are different concepts in pulling it together, but it's so hard to answer that question in one single way, because pricing right now is, again, we're all figuring this out. Every founder's figuring it out day by day, and the buyers themselves have different budget conversations, especially in this uncertain market right now. What is able to be locked in to be spent?
Yeah, I think I have not seen the promise of a full outcome-based pricing yet. I think it's going to happen. It's inevitable. It's just a question of models catching up, because if you think about even the code gen tools, they still price like SaaS. I think this view that you see these charts of global labor spend pool is X billion dollars, hence AI is going to be that big. I don't think you can equate it one-to-one, because people generally buy software as they think about software prices. I mean, it's kind of crazy how much value we get out of software. A Chipotle burrito costs $12-13, and people will complain if cursor goes from $20 to $40. But that's how people perceive software. So I don't think we're going to, at least in the next year or two, till the models are not quite there to completely replace human labor, we'll move towards outcome-based pricing. But I think it's going to happen inevitably. I think the other thing I think through a lot, and which I'm willing to bet in 5 or 6 years, I do expect AI companies just to grow faster, just because I think they'll just have smaller teams.
They're not faster enough. I'm just kidding.
No, in the sense that I do think there's this burden of company growth slowing down because you hire more people, inertia comes in. It naturally happens at bigger companies. So obviously, growth, because AI is new and it's a brand new market, so hence there's opportunity to grow faster. But I do expect companies to be a lot more lean and efficient, which will lead to more profitable businesses. But also, I think these companies will just grow faster because small teams, you have to manage agents that manage human beings. You can move much faster as a company. And I think that's going to have a lot of interesting implications on profitability of these companies, but also I think they'll just grow much faster because of smaller teams just move faster.
The other way, I think that's who's going to get the first $1 million job that isn't the CEO? I think everyone, to your point, it's you have a very lean team, but then now everyone's expecting the best talent. That's the most efficient. Toby's article about making sure everyone thought AI first. Everyone's hiring people like that, and you're not part of that. But I will now command a higher salary because I have just that much more outcome and output. That'd be really interesting for the broader profit margin. Can you ascribe value that way? Because now someone has to pay the cost. Right?
just want to say a few things. So one, I think we are starting to see outcome-based pricing, and I think we've actually already had it framed in certain ways before. And so I think of like credit card fraud as a great example. I'm gonna deal with this, and if there's chargebacks, like it's on my book. So like I think historically there've already been companies that are sort of doing this in a certain way. And if you just sort of describe like, hey, I'm gonna give you a qualified lead. It might have to do a little bit of work to get that lead, might have to do a lot of work, and you're just gonna get this thing on the other side. So I think we're starting to see the outcome-based pricing thing too. I think there's this interesting framing between co-pilots and agents and like how you sort of present to people whose jobs you might automate. And so co-pilots are really easy to take in. The enterprise will supercharge you. If you want to automate away their work, like maybe you have to go to the boss or find the thing that's outsourced a little bit more. So you have to take the business model, to the right sort of level of buyer. And then the third thing I'd just say, it's interesting to think about this from like a pure economics, a labor economics lens. Like what we sort of have here is like a conceptually, like at some point, if the supply of labor or now agents that can do labor is sort of approaching infinity, does that mean that the sort of incremental cost is approaching zero and therefore like everything should sort of tend towards free, which I think would be concerning as software investors. And I think like the very simple outcome, of that is like we have to do something unique. Like we have to be better than everyone else. Like if we're just all doing the exact same thing, the commoditization pressure that's going to happen with something like agents is going to be tremendous. And so people really need to describe and price to whatever the unique value is that they're bringing.
I think you separate the conversation into LTV expansion versus kind of unit economics and then the other side, CAC going down. I think that's where we're kind of talking two different ways. Is I think AI is helping on both sides, and so we have to kind of think through both for each of these companies and how they're able to describe it. Like we're in a company called Range, which is like AI for wealth tech. One can argue like it's one of the best business models to charge you 3% for a lifetime of how much wealth you make, and you make more money every year. But their job is not to just keep that business model. Their goal is to reduce that cost and democratize access and charge you a flat rate a year. That just changes the whole industry, right? If that works. And so that's all because they have basically co-pilots for all of their advisors. An average advisor has 30 people. Now they have 300 people going to 1,000 people per person. That's unheard of, like overnight, for the whole industry of labor. So what do you do when that happens, and how does that change that? But ultimately, they have to make their money back through extending LTV and doing other things that we're not contemplating and doing that. So I think there's like a push and pull to thinking through the economics conversation.
One thing that this might be less on pricing and outcomes, but just in terms of maybe more packaging on that piece. One thing that we've seen is in terms of those that are building agents is there's a lot of companies that are naming their agents. So I don't know, Sally SDR, Mark the marketer, and so one of the things that we're thinking about and guessing about is the reason this works is that when you go up against budgets, you're now marketing Sally, the SDR against a live human SDR, and so you're going to fight for that budget that Sally is going to cost, $60,000 versus my SDRs. 90,000, but Sally is going to be, 10 times better and more efficient and more at scale than the actual human perspective or human being. And so there's a little bit of positioning and packaging of how we've started to see companies fight against those budgets that you can get more with our product, Sally the SDR versus your SDRs on your own team.
I wonder, since we're talking about Sally SDR, maybe we could talk about the real human's job, since a lot of, we actually have a lot of executives from traditional companies that are here. And I want to, maybe we could just dive into like who will be actually having a job in the next 10 years. Sorry, I'm prepped. This is an unprepped question, so I'm on the spot.
I'm going to take a very, very high level macro view. If you look at the arc of technological revolutions, I don't think employment or living standards have gone down. I think it's gotten better, stayed the same, or improved. I think there could be disruption in that. But I think generally in knowledge work, you're going to have people who are employed and who are probably on average doing more productive, fulfilling work. There will be a lot of change within that.
Yeah.
But
100% agree.
Probably CEOs and founders, they won't fire themselves.
Everyone's going to be a founder tomorrow.
But I think if you do believe in the exponential curve of I think, when I think about what's actually possible today, I don't think we've seen that level of automation yet on the business side, and I do think that will happen once browser agents get really, really good. Like all of the internet is now an API. Everything is fundamentally automatable now. A lot of us do very discrete, deterministic tasks that are very repeatable. I think if you believe in the exponential curve of this in 10, 15 years, those jobs could go away. What that means in terms of society, it's interesting. It could also lead to new types of jobs being created, but I do think it's going to have serious labor implications, and it's hard to kind of predict where it shakes out. But with these big shifts, I think usually there's a lot of job loss, but there's also like a lot of value creation and job creation historically. Maybe this time it's different, but I do expect a lot of shift in the labor market in terms of where value gets to.
I think that the people who are going to get left behind are the ones that don't incorporate AI into their job or into their lives. I think those are the ones that are going to get left behind.
I agree, and so we need our educational system to start pushing that a little bit harder. But I'd also just sort of answer the question with a little bit of a joke, which is, I think sort of Sebastian Thrun first asked me this, like, am I just an LLM? Right? Like, how much of my day-to-day is saying something, regardless of the action that, the LLM would get mostly right. Well, that stuff's going to change, right? And if I'm not sort of striving to, focus more on my day of the things where I'm not just an LLM, I'm going to get left behind. So, that's the way I think about it.
I was totally thinking about that in the morning. I might just LLM. On that note, thank you all for having this fantastic panel on enterprise AI. And we're going to kick off the next one-on-one fireside chat. Okay. Thank you guys. Okay, group photo, yeah. There's an iPhone?
All right, now let's look at the iPhone second, please.
Oh.
Take a big smile, stay there. One more. All right, stay there, 3, 2, 1. One more. Ready, 3, 2, 1. Thank you.
Thank you.
Here again. It's been a while.